morning to all traders and welcome to this Wednesday's Market Insights video on FX majors. Today we're going to have a quick look on euro dollar. We're going to look at the pound dollar and also the Aussie dollar. Obviously, the reason is a stronger dollar across the board. That, of course, happened for various reasons. For the global markets, and if we look at the coronavirus pandemic situation, we've had the first confirmed US patient that was reinfected with COVID-19, and it seems like the second time that he was reinfected, it actually was much worse. Now, at the same time, we also have heard news that hopes for a stimulus deal now seem to be set to disappear, right? For that reason, equities fell, the dollar strengthened across the board. That led to weaker majors against the dollar. Now, at the same time, we also had the IMF saying yesterday that the global economy will shrink around 10% in 2020. This is way bigger than 2008 financial crisis, and it's actually adding a lot of concerns and a lot of uncertainty in the current highly uncertain environment. Now, we've had very bad geoeconomic Germany data and also very bad unemployment data in the UK that have driven prior the US Open, of course, the euro and the pound lower to fresh lows for multi-week lows, I would say. And Aussie, and at the same time, don't forget that, you know, in terms of Brexit, we're not really getting anywhere, and it is the 14th of October today. Don't forget that Boris was talking about a 15th of October Brexit deal or some sort of, well, certainty, let's just say, but nothing is happening on that end, while at the same time the coronavirus cases, not just in the UK, but in Europe-wide, are actually rising to levels that they have not expanded before. Now, the third pair I want to look today is the Aussie. There is now increasing tensions between China and Australia after China said that they will actually reduce copper imports from Australia. And while we'll talk about trade and escalation of tensions, don't forget that we've also got the EU now giving the green light to hit the US with tariffs related to Airbus and Boeing rulings. So when I start with the euro dollar, I do remain with the view that we are on wave 4. However, after this ABC flat down, he expanded flat, right? Very accurately done, if I may add. We've had this bounce on the cluster here, and I was expecting price to move higher, right? I do not like this move to the upside as an impulse. It definitely doesn't look impulsive, right? It looks corrective. So it looks like a WXYZ. I mean, it's like triple zigzag or something, which seems to suggest the following. Seems to suggest that wave 4 is going to be lower down, right? And we are probably going to go for a W, X, and Y. Now, does this mean wave X was done here? It's very possible that wave X was done here, which means now probably going to go for a double zigzag, right? An ABC, simple zigzag, maybe even down to wave 4, which could take us to, well, definitely break below the previous cluster, yeah. But we're also going to be looking at the 1537 because this is a 61.8 Fibonacci retracement of wave 3, right? Now, in case, of course, wave X is not done, we could be looking at a complex move that is going to take us a little bit higher, right? But I wouldn't be looking to break above the 119 or so. Now, jumping on pounds, we've been looking at this as well with a bearish eye, right? I've been actually waiting for this wave Z, is a triple zigzag, right, to finish this bearish cycle, move to the downside. We're still in intermediate wave 1, okay? And we're actually in minor wave 3 of intermediate wave 1, right? Since we've actually moved back to the 50 retracement of this move to the downside, I'm now looking for this to be for wave 1 to have ended here. We're moving down impulsively for wave 3. Now that said, we've done a WXYZ over here as well, a triple zigzag. It does look corrective indeed as well, similarly to the euro dollar. However, obviously there is way much more downside for the medium term over here. I will be looking again at 126.39 to give me the impulsive validation for further downside. That could take us to at least 122.24 for minor wave 3, in my opinion. And last, Aussie. I was also looking at this 1, 2, 3, 4, and 5, if you recall, to get us down to the 1618 of waves 1 and 2 in the immediate degree. It didn't happen. We've had this move to the downside, minute impulse done down here at 1618 at around 0.7015, and that is the 5 of the minute and the 3. And the fact that we didn't cross above wave 1 makes me think that this might be indeed the wave 4, and we still remain impulsive. That's a nice ABC, to be honest. Either we've got a W, X, and Y for wave 4 and then move down, or we end it here, which is likely the case, and we're moving down impulsively. Now, if we indeed are moving down impulsively, this means this is some sort of leading diagonal here, 1, 2. This is 1, 2, 3, 4, 5. So we're going to get a 3, a 4, and a 5, right? It does look a bit corrective, but I see this as a leading diagonal in wave 1 with a multi-structure impulse to the downside in wave 3, right? Minute wave 3. And we're going to head down for wave minor 5, which is in the middle wave 3, around 0.6972, which is going to be offering us probably some corrective opportunities for wave 4 and then continuation further down. The other scenario, this is an ABC, right? And this is again an ABC. We're going to move higher again, which would invalidate this move having ended up here. I mean, the impulsive, the bullish move. It would mean that most likely we're going to have an extended wave Z, which is going to probably be, this is going to be an ABC, right? So it's a W, then X, which is down here, and then we're going to see a Y for wave Z. Then we should start looking for prices to move lower.